locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave Seymour and Nathan Amaral.
All right, we are
here.
Hey,
buddy, how are you?
I'm doing fine. You're looking.
I was going for one of these kind of opening looks.
One of these, right? This is like 1980s.
It's like the action.
But you are wearing one of mine. One of your
yes.
Freedom Venture hats. They look so schnaz.
Yeah,
they look so snaz.
Yeah,
those are great Christmas gifts, by the way.
They are fantastic Christmas gifts. They're also fantastic giveaways.
They're great.
All of our folks, everyone who answered the question a couple of weeks back, your hat is in the mail.
Yes, it's in the mail.
Those of you that didn't, the hats that the question that wasn't asked and answered by anybody, well, your hat is not in the mail.
No, it's not.
All right,
no, it's not.
Winner, chicken dinner. Some people get one, some people don't. Right? You gotta play the game if you want to win something.
That's so true.
It's all good.
That's so
What's
true.
up, Nate Dog?
What's up, man? How was your Thanksgiving?
Oh,
was it a good day?
Oh,
what?
So Mary Beth went to hooked it up at a place called the Big Pig.
Oh wait, you went somewhere?
Well, I only went to pick up the turkey breast and bring it home. We didn't go eat somewhere.
Oh, okay.
So
okay.
she ordered a smoked turkey breast from this barbecue place, and it was $100 for a breast, but it was a big breast.
Wait,
big,
wait, hold on. It's $100
for a breast.
100? 100.
Yeah, it was a honey for this smoked barbecue turkey breast.
I've never heard of chicken turkey being so expensive.
I don't know. What are you doing? I'm just telling you. You asked me what my Thanksgiving was. I'm telling you. Right?
No.
Wow.
All right. Well, let me put it this way too. I have never bought a whole turkey, so I couldn't even tell you how much they go.
It wasn't a whole turkey. It was just the breast.
Dang.
What? Yes, it was tasty. It was smoked.
All right.
We had some smoked turkey breast. We had some Yorkshire pudding, otherwise known as a popover. We had some Brussels sprouts.
All right.
What else?
Did you have
stuffing?
Any stuffing? Do you have any corn?
No, we didn't do any corn this year. No corn.
Traditional dish.
Corn. And I just had an upset stomach for the rest of the day because I hadn't eaten like that in months.
That's
very uncomfortable.
I know you've been doing so much. How's your rowing going, by the way? You've been like rowing.
Actually, I'm glad you asked me that. It's been going terrible.
Why?
I don't know. I lost my mojo, man. I haven't rowed for a couple of weeks, but I have been hitting the little sauna in the house every day.
Oh, there you go.
Get a good sweat on in the morning. Yeah,
there you go.
Little sauna.
Gotta get on the
sweaty time.
You gotta get on the rower. Gotta get back to the rower.
I gotta get back on the rower. Yeah, Mary Beth's funny. She hits it hard, and she keeps on coming upstairs like she's got an intimate relationship or something with these people. She found out that one of the rowers has only got one eye.
What?
Yeah, he's a one-eyed
rower.
Yeah.
So
is that what they call it? Rowers, or are they rowing people?
No, they're rowers. They're rowers.
Are they rowers?
Rowers. They're a rower. They're a rower.
Yeah, one of them's only got one eye, and she like.
How did she find that out? What is she like? Stalk them on Facebook?
The guy told them when.
I can only see you one way.
Maybe that, or he just kept on rowing around in a circle. I don't know what the hell was going on. So anyway, yeah, it was good.
Oh goodness,
it was good.
Nice.
So yeah,
that's good.
Yeah. How was your Thanksgiving? Did you celebrate Thanksgiving?
No. Everybody's asking. I got a bunch of messages, people saying Happy Thanksgiving, Happy Thanksgiving. I said, I haven't been in the U.S. since 2013. Well, like physically living in the U.S. since 2013. Yeah. So it's been a little while since I've celebrated Thanksgiving. Yeah, no, we don't. We don't celebrate. That's a United States thing. So yeah, it just kept on going. Everything kept moving around on this side of the world. Other than we have a new lockdown going on, and my daughter my daughter got her first COVID test yesterday. Had to wait 2 hours in line in a car line because it was like mandatory for school and stuff like that. If I had known that, I just would have found an alternative solution. But I thought it was going to be like 10 cars. No.
Did they take like the tree trunk thing and shove it up her nose?
Yeah.
That's what they did to me.
Yeah.
I had one test done when I went to Tampa. Did I tell you this?
No.
I come back and Mary Beth's like, you got to get a test. I go, what if I don't?
Yeah.
She goes, well, they'll call you if you don't quarantine. I said, who's going to call me, Mary Beth?
Yeah, who's going to call?
Governor Baker. I said, what? Okay, Governor Baker. I said, hold on a minute, time out. You're telling me that if I don't get a test, Charlie Baker's, I said, how's he going to know where I am?
Yeah, exactly.
She goes, FaceTime. I go, what? She did. I said, let me tell you something. If Governor Charlie Baker FaceTimes me to see if I'm quarantining, as soon as I see it's Charlie Baker calling, I'm going to head to the restroom and pretend I was sitting on the party while he talks to me. Charlie, what's up on FaceTime? Yeah, so anyway, I got that thing shoved down my nose, and it was incredibly uncomfortable.
Oh, geez.
And I had to wait in line, too. So it's everywhere. It doesn't matter whether you're sitting in a beautiful island like you are or whether you're sitting in a cold, gloomy New England.
It's true.
You know, day after Thanksgiving here in Boston.
Yeah.
So do the thing.
Do the thing. Do the thing. All right.
Do it.
Well, hey, wait. Now I like to do it with a little bit of music now. Welcome, everyone, to the Cash Flow Show. These are your hosts, these two guys, one from the UK. Do you go? What? Are you a dual citizen?
Actually, no. Oh, maybe. Depends whether Interpol or not.
Welcome to the Cash Flow Show. These are your hosts, Dave Seymour and Nathan Amaral. We are here to share with you some insights, some understanding, answer any questions that you have about cash flowing real estate and acquisitions. So, if you're new here, leave a new in the comment section. Let us know you're new. Or if you have been around, like Darren, in the comments, just say hello. We'd love to say hi to you. And Darren, hello. How are you? Good to have you here.
Darren. Hello, Darren. There he is.
Hello, Darren.
So it's all good. Yeah. Look, you sent me a little link, and I thought it was kind of appropriate and yet sad at the same time. Walt Disney. They just made an announcement, right? What was that?
Well,
what
it was like so I've been keeping up on what the trend is because of COVID. There's a lot of talk about new vaccines coming out, but we're not seeing that impact the economy just yet, right? Even though the stock market is jumping up and down, but it's not really going into small businesses. Well, speaking of businesses, big business, Disney decided to lay off 32,000 people. 32,000, and that's a direct impact on their parks. Specifically, I think it's a combination of two parks. But it's going to make a big dent in that industry for a little while. So,
you know what's interesting? After 9/11, New York City obviously went through pretty dramatic phase, if you will. Yeah. And it was a couple of years after that. I think it was about 4 or 5 years after 9/11, which was in 2001. So about 5 or 6 years. So 2006, 7, around that period of time. Okay. I took Mary Beth to New York City, and we stayed at Le Parker Méridien. Parker Meridian. Oh. Beautiful. If you say it with a French accent, it
sounded like a completely different place.
Yeah, doesn't it sound nice? Yeah. It's like, did you stay at the Parker Meridian? Yeah. Bonjour. Did you stay at the Parker Meridian? It just sounds so much sexier. But anyway,
it does.
Seriously, when we stayed there, you got the very best room. I think it was for like $99 or $125 a night or something like that. Reason being, obviously, supply and demand.
Right, exactly.
People were still not confident and comfortable going back to New York City.
Exactly.
And I've got a couple of meetings scheduled in the city first quarter of next year, January, early couple of weeks in January. And I thought to myself, you know what? I'm going to go back to the Parker Meridian. Maybe I'll take Mary Beth. Yeah. We'll get something to eat in the city.
Right.
Dude, they're closed. They're closed.
Wow.
If you go to Parker Meridian's website, they're not even anticipating opening until April of next year.
Oh my goodness.
And it's like nobody is discussing those kinds of things for some reason. I don't know why.
No, yeah.
I don't know if it's I don't know if it's a case of, let's be the ostrich like we've discussed in the past, right? Keep your head down in the sand.
Right.
It's just going to all go away. It'll pass. Don't pay attention.
I think
go ahead.
No, I was going to say, I think that's where this fight is coming in, or, but where you have the push for, we need to open up the economy. We need to get back to work. We need to, there's that side of it. And then there's the whole lockdown side of it. And I mean, I don't know. What's your take on that? Because for me, it's like, the way I see this is, if we don't get back to work, right? If we don't get things up and running, and we don't combat it at the same time, it's going to be, probably one of the biggest crashes of our lifetime.
Well, I think we've already passed that, because we've had this discussion week in and week out, and until something changes, we'll probably continue to have this discussion.
Yeah,
is the fact that nobody has really allowed the bleeding to happen.
Yeah,
right.
Yeah, the Band-Aids are there.
Now we're beginning to see part of it, because there's no stimulus package that's been offered. They're still pushing and pulling over the presidential election, right?
Yeah,
Biden is now getting a little bit of help from the Trumpster with regard to bringing in a transition team,
right?
And yet, depending on who you listen to, some people are still saying, "Hey, this thing's not even gonna fly."
It's not
depending
over.
on whether you're far left or far right.
Listen,
right? Biden's going to jail. And Trump's the man.
Yeah.
Or, Trump was a lion sack of doo-doo caca. Biden's the man.
Well, I mean, I think a lot of people forgot, the Gore and Bush, campaign and that presidency. And for me, it made a big impact in my life, because for so many years, and this is just me being ignorant at the time, for so many years, I believed that if people go to the ballots and they go to the voting, whatever, I forgot oh my God, what do you call those? The voting stations, right?
Voting?
Yeah. Thanks. The booths. Yeah. That your ballot is going to make the impact. After Bush and Gore, and when I saw what happened there, the Electoral College, then the Supreme Court, I said, good God, look at this. So, it gets to a point that in the worst case scenario, it comes down to a select group of individuals that are going to make that happen, whether it's the Electoral College or on a higher level, the Supreme Court. And I think we're just seeing a repeat of that same election. That's what I think. I think we're seeing a repeat.
Here's what's interesting, right? So that election was all about the Chad, the hanging Chad.
Right, the Chad.
Punch out the little thing.
Exactly.
This thing is, again, kind of interesting. They're talking about that specific type of software.
Right.
That I think there was I don't know how true these things are, so I'm just consider the source. I'm not an expert, right?
Yeah,
I read the same crap that everybody else does.
Yeah.
Which point of view you have. But there was one little blurb I read somewhere that said that Marky Zuckerberg had invested $350 million in the software that was run in a lot of the states to count the votes, and he also owns part of that software. And then Zuckerberg's the same guy. Dominion, thank you, Darren. Yeah. And Zuckerberg's the same guy that shut down a lot of the messaging. Him and Dorsey boy there with the Twitter, big fluffy beard in the ear in Twitter. So look, I don't know.
Yeah, we don't know.
I don't know. It's to the point that we made the other week. If there are forces outside of my control that impact my earning capabilities, then I have to focus on what do I have control over, right?
Yeah.
And I accelerate what I have control over to offset what I don't, and I think that's just a good common sense.
Yeah, and it's tough, even though it's constantly in the news because it's a trending topic. But again, we have to refocus on this business side of it and the economic side. So direct impact for that is the travel industry, is people going back to work, the restaurants, right? It's that whole ground level economics that's not going anywhere in many places. And I think that's the biggest thing. And I've been saying this since the beginning, like since, the first lockdown that we had here in Europe. I'm like, this isn't going anywhere quickly. And there's a lot of projection right now where people think, as soon as this vaccine comes out, it's going to make everything a lot better. I still think we have another 6 months, maybe 8 months, who knows, a year of this to actually really turn around. And I think this is going to have a big impact on not only the financial system, but also economically on a local level.
Of course.
Yeah.
Oh, of course. Look, if you can't go to a place of employment and transfer goods and services for income,
right,
then what are you going to do? You're going to rely on the government to take care of you. Mm-hmm. Unemployment numbers are nowhere near where we want them to be. They're nowhere near where they were expected to be.
Yeah.
Unemployment claims have gone up, not down. We're still, I believe, around 2.5 times the unemployment rate we were at prior to COVID. So it's still there. It doesn't go away.
But at the same time, Dave,
a longer race.
At the same time, though, they just announced the Dow just hit 30,000.
30,000. Yeah.
It's like, so you see this stuff happening, right? And it's like, I don't know if it's a way to like, hey, we still have confidence, or things are. This could be a direct result of the impact of the previous, just a few years ago, where, the tax reform and also, tax incentives to get companies to come back to the U.S. And then maybe that's what's the direct impact. More than likely it could be. But this could also be a false leader for a lot of people who are thinking about investing. Right now, they may feel like it's very volatile and, do I put my money in now? Do I take it out? There's a lot of, mental risk factors in that, right? I mean, that's what I see.
Investing requires some discipline. Okay. If you look at, I tell you who's making money, the educated day trader. That's who's making money, because they know when to go short and long. They know when to get in, get out, and they do it with rapid speed. They make a lot, they lose a lot. They make a lot, they lose a lot. But I think we titled the show, why does the stock market only pay you 2.3% or 2.4%? And it's to your point. What's happened is the uneducated investor lives in a world of a knee-jerk reaction. So if you took your money out, I think it was last week, right, when everything was going to hell in a handbasket. Yeah. If you took your money out and it was on the sidelines, you just missed out on a little bit of a run right there to 30,000.
Right.
You missed out on all that upside. So investing in the way that we work outperforms all other investment types on two fronts: one on yield and one on the risk exposure, right? I had an investor last week, actually this week, sorry. And the discussion was around the fact that at Freedom Venture Investments, when you put capital to work with us and invest alongside us, that capital is illiquid, meaning you can't pull it back out again for approximately 5 to 7 years, right? Now that sounds like a long time, but when are you going to retire? How much more time to retirement?
Good point.
What does your current retirement portfolio look like, et cetera, et cetera? And you start thinking about those. The investor who believes that apartment house investing and commercial real estate investing is like flipping a house where you expect a return in, 8 to 12 months. Well, that's ignorance. That's not what this is. Right. This is a mature game. This is a grown-up form of investing, whereby we put that capital to work for a longer period of time. And because that capital is committed, well, it's illiquid. That's when we can start talking about 10 to 14% targeted quarterly distributions. Yeah. We can start talking about those larger ones. But that number of 2.3% being the average return in the stock market is a true number, because the investor throughout their career has put it in, taken it out, put it in, take it out, put it in, take it out. And they've lost the upside potential because of the knee-jerk reaction. So the point I'm making is this, Nate: depending on how you look at it, being illiquid with us, putting the money to work for a set period of time, being illiquid with us is either an advantageous outlook or a disadvantage outlook, depending on whether you want to keep on having, money moving in and out. But historically, it shows that working capital for a long period of time in an aggressive environment like commercial real estate is absolutely the very, very best way to go. Does that make sense?
Yeah, it does. Another good way to look at it too. What do you think about this? For someone who has no idea, or is just from getting familiar about this, it's almost like, I mean, you remember, do they still have CDs? Do they still have
what, certificates of death? Yes,
yeah.
they do.
Oh, okay. Yeah. They're still offering those products. Okay. So another way to look at it is, like a real estate CD. Okay. So banks have those certificates of deposit, and you're going to lock them in for 6 months, a year, 2 years, whatever. And this is kind of like the same thing, except it's a little bit longer term and it pays a lot more. I look at it that way. You should not need this money in the next 6 months, in the next year. You're going to need, this is a long-term investment. I like how you put that. It's more of a mature investing, someone who, sure. Has got a little headway on them a little bit,
Yeah, it's not a scratch ticket. It's not a scratch ticket.
That's a good one. It's not a scratch ticket.
Here's what's interesting about it is I've been it's been a really good week. I mean, I've been working with a company in the UK called NextGen, and NextGen is a marketing company. Yeah, John Patch, good guy, real good guy. I got to talk with him a little bit and get to know him and his business model.
Okay.
And they have an outbound call floor that calls to the English version, if you will, of accredited investors, experienced or sophisticated investors. So I've been doing a lot of calls this week with UK investors, and there's a commonality in the theme of questioning. And as soon as we start talking, and I'd be interested, what we should do? I'd like to do a little survey one time, Nate, and throw it out there.
Okay.
Because here's what I heard. When I start talking about 10 to 14% targeted returns, from the investor who's uneducated, I hear things like, that's not possible. You can't do that. That's illegal, right?
Yeah.
That's what you hear. Commercial world, the value of an asset's got nothing to do with CMAs, right? Market analysis of property to property.
Right.
Everything is valued on its net operating income divided by the cap rate in the marketplace, right? And because each cap rate is different depending on which market you're in, it's really interesting to, even long distance on these phone calls, begin to see or hear the bulbs popping, like they're beginning to come around and understand the process.
What have you discovered from that kind of research and talking to people who are abroad? I mean, do they see as the United States as a great investment opportunity, or are they like,
sure.
Yeah.
No, it is. I talked to a gentleman today who was from Yorkshire. So he's from north of England.
Yeah.
And up in Yorkshire, they got a totally different way of talking. And he was like that, and he was kind of slow in his delivery.
Yeah.
But, I just said to this gentleman, I said, what's your experience in it's property over there, property investing. I said, what's your experience in property? And he said, it's funny you ask. I'm just leaving a development I'm doing now. He said, I should be able to double my money in 18 months. And it was a smaller thing. It was an old church that he was converting or something like that.
Okay.
And then I said to him, well, what's your cash flow look like? And what's your tax implication on that? And his taxes on like a $1.2 million gain were over 50%.
Oh,
50%. And I'm like, oh my Lord. I said, how painful is that? He goes, yeah, that's what we have, the high taxpayer bracket over here. And then I just turned around and I said to him, and I just said, what would it be like if you weren't paying, taxes on those lump sums, and you were paying a smaller, amount of tax, but you got the cash flow coming in? I said, because we're able to take each of these assets in a business model, make them more valuable with the net operating income, bring in that cash flow for you, so that you can live your life rather than working like a dog just to give the government, 40, 50% of your earnings.
There's also two sides to that too. One, on the current state of affairs in the United States, if this new tax plan comes up next year, then get ready, because capital gains are going to go through the roof. As well as the potential of eliminating the 1031 exchange, but also I know, that's a battle. But the what's always been, I think, a very I guess a point of interest or intriguing for a lot of people abroad is where they say, hey, I can invest in the US because it's cheaper on taxes compared to some of their countries, right? So to foreign countries. But if that goes away, then I think we're just going to choke out the capital in the United States. It's not going to be as attractive,
Look, when you begin to research outside of the borders of our country, it's amazing what people will settle for. They'll settle for less.
Yeah.
I think I shared with you a couple of weeks back.
Yeah.
One of the pension funds in Europe was looking for something better than a 1.2% return on capital, right?
Yeah.
And it's like I almost want to reduce my preferred rate of return. I'm serious. I almost want to reduce it, because when somebody's mental gymnastics is at a 1.2% return,
that's true,
and we start talking about double-digit returns, it doesn't compute for them, right? It doesn't compute.
Right.
And the question I got from him is your fund is fund one is $100 million, and I said, yeah. And he said, well, if I write you a check for $100 million, how fast can you spend it at these targeted returns? And I connected with Walter, our chief investment officer. I said, what do you have on deck right now? He said, if you can get me access to $100 million tomorrow, he said, I'll have it working within the next 8 to 12 weeks. And I said, buying our buy box, not deviating from our return structure. And he went, absolutely. So, when they're spending, $500 million at a 1% return, it's enough to maintain, their distributions within their pension funds. But, I just use the opening line. What would it be like? What would it be like if you didn't have to live in that world of compressed returns, underachieving velocity of capital? What would it be like if you could work in a more aggressive return and yield environment, but at the same time know that you're a Clydesdale, you're workhorse of money. It's always been commercial real estate, and multifamily has consistently, been the place to perform the highest. So, it's interesting, man. I'm on an education journey myself, Nate. I'm learning things consistently as we're going along. Bringing this capital in. Really excited. I've got an MLB pitcher. Very, very cool guy. I got to talk to him this week. He's excited to come in and play with us.
Nice.
He's funny. He said to me, look, I've got some properties, just north of New York. He said, but, I know what I know and I know what I don't know.
Yeah.
He said, I'd love to know what you know.
Yeah.
And I said, it's real simple, man. I said, bring some friends, come down to Florida, walk some properties. I'll teach you everything that we know.
Yeah.
And, in return, you're going to, work some capital in the fund. Let's build a bigger relationship going forward.
Yeah.
And he's all excited. And then he says to me, and I'll teach you how to throw a baseball. I said, dude, I'm all set. Don't worry about teaching me how to throw a baseball. I'll be good. But, it was interesting talking to this guy, Nate, because he's he's got what we have. He's got that bug of sharing financial knowledge, right? He said, in his MLB career, he saw.
Oh man!
He saw the vultures, if you will,
right?
And just keeping up with the Joneses. One guy pulls up in a Lambo.
So
next day, 3 other guys got to pull up in a Lambo.
Yeah, so true.
One guy got the $1 million shitty looking gold watch, and the next guy got to get one. It's all so about the bling and the BS. And he said, nobody's telling them about what it looks like when they can't pitch a ball anymore because their arm's shattered. They can't run to the end zone anymore because their knees are shattered. Nobody's talking about that.
Exactly. It's one of the biggest reasons is because it's embarrassing. At first they had the fame and the celeb part of that in their sport, but the good thing is some athletes have come out. I think one of the iconic stories that we've always heard is Tyson. Right? Tyson, how he had, at the top of his career, the wealthiest boxer of all time. but he didn't maintain it. And then we look at like proteges after him, where we got Mayweather now, who said, you know what, I'm going to play a different game. But that took someone else to fail. And then unfortunately, there's a lot of other athletes who are not in that position or don't know what to do with their money. There's the whole keeping up with the Joneses, as you said. And you just got to like look into the future and say, hey, you know, I don't want to live. I want to live better, you know, later on.
Crazy.
Yeah.
You mentioned that particular boxer who learned from somebody else's mistakes.
Yeah.
I have part of that guy's financial team works for us.
Really? Oh, I didn't know that.
Yeah.
Wow.
Yeah, it's interesting.
Oh, is that what you mentioned last week? Something.
Yes, that's it. That's as far as we can go with that. But it really is kind of interesting to see, you know, how you can. It's just, I don't know, man. I'm getting to a point where the resistance is, how do I be diplomatic? Oh, I don't. The resistance is a pain in the rear end, dude.
Yeah.
Stop telling me what you know when you're earning 2, 3, 4% and how powerful it is. We call those dig jams. Damn, I'm good. Just ask me. DIGAM. Those kinds of people. Dig jam. Damn, I'm good. Just ask me. Right. You know, there's a lot of that out there, and I've got to a point now where my tolerance with investors is I just take it away from them. This isn't for you,
right?
You know, you obviously are very comfortable,
right?
And you know, swimming in your own magnificence, right? That's 50%.
Yeah,
donkey, you know,
right.
Donkey. So you know, when you meet somebody who's excited about sharing some financial insights and stuff, you know, it gets to be pretty good. Yeah. Definitely.
Yeah, that's true. Yeah. But speaking of Florida, by the way, I know I want to share the upcoming event here. I'm going to share the screen again. Ooh, I love the new website, by the way. Love the new the rotating video. We got Harrington and
that's the new site. Eric was tweaking around with that a little bit. Looks really good. You know, it walks through. That's Walter as CIO. This was at Bradenton.
I don't know who that guy is. I don't know who he is.
That's a good-looking son of a gun right there. You should play that commercial. That was a TV commercial we put together for the Boston Cup, which is the antique car show here in Boston.
You said you filmed this. You said you filmed that in Bradenton.
The scene that you see where Kevin Harrington's sitting and I'm sitting on the
chairs.
Okay. That was in Bradenton.
Okay.
At a 140 unit complex in Bradenton.
Okay.
But yeah, we have an event coming up. It's January 23rd, I believe.
Okay.
Down in Bascom's. There it is in Tampa.
Okay.
We also have some events scheduled out. We haven't quite dialed in the dates yet. Back up here in Boston.
Okay.
Just you know, if somebody's interested in, you know, meeting with us face to face and taking a look at some of these offerings and how we put this stuff together, it's a chance to do it there. Also, Nate, actually, if you scroll back up to the main page, can you get back on the main page?
Hey, Dave, I just want to let everybody know that at this one in Tampa, I'll be there personally signing autographs. I just want to let everybody know.
Oh, I can't. That's so good. That's so good. So right. If you look at that, can you see the top one that says FV Homes?
Yes, I see that.
I've had to like re-engage my single family house buying business.
Okay.
Because people are screaming and shouting and asking for it.
Yeah.
I do a radio show every week here, 104.9 FM North Shore here in Boston, and we talk a lot. You know, I have some great guests on there, but we talk a lot about what we're doing in business, and I keep on getting people saying, "Hey, buy my house." Yeah. So we re-engaged our single family house buying business right there.
That's great.
I got a lot of traction. Look, man, it's happening. People are in pre-foreclosure.
Yeah.
I'm getting the call.
Right.
You know, we're beginning to look at what's going on around us again. So,
and it's just to be clear though, is this just Massachusetts and Rhode Island, Connecticut, or how far out is this going?
No, look, you know how deep my networks are.
Yeah.
If it's somebody I can help in Florida, I've got teams in Florida that can
Okay.
execute on this stuff as well.
Okay.
But just as a side note, our primary focus is obviously the fund and the apartment complexes and the commercial.
Right.
But if we can help somebody in the single family at the same time, we're not gonna walk away from somebody. When it comes to a single family home. But yeah, the events are on there. There's a chance to get in there. I believe there's some education on that site as well.
Yes.
I shoot a ton of short videos, just really vocabulary wise to bring our investors up to speed. A lot of different stuff going on in there. Oh, that's a great interview I did with Jack Canfield a couple of weeks ago. That's up there as well.
All right.
He called me up and asked me if he could interview me. I'm obviously a client of Jack Canfield's. I've known Jack for years.
Yeah.
The full video that we did down there in Bradenton is also on there. That's the one on the left where I look like I'm drinking some alcoholic beverages, but I don't. New England Real Estate Journal. Yeah, we've been busy, man. We've been doing a ton of stuff. So there's a lot of good content on there as well for somebody to get familiar. So yeah, good stuff. Good stuff.
It is.
Hey, can you pull up that little slide I gave you? I just want to show some numbers there. I mean,
yes.
I've used this a lot in presentations, and I think it does a real nice job of highlighting exactly, why commercial real estate is such an attractive investment. So if you look at this, you've got annualized returns, which is the the profile for yield, if you will, goes from 0 to 10%. And then the bottom axis there is the annualized risk exposure for each of these different investment types. So if you started with commodities there on the bottom right-hand corner, I don't know why anybody would invest in commodities looking at those numbers, but it's got a 25% exposure, annualized risk exposure, and a maybe 2% return. So that's just historically what they've done. If you look at the data there, 93 to 2013, this hasn't changed much at all in comparison to when this data was pulled. Government bonds, if you look at the next one up on the left, government bonds back then were given a yield of around 4.5.
Yeah,
we know now that they're not even at 1% anymore, and yet their risk exposure is incredibly low because their return is low. Corporate bonds risk exposure about 6%, return 6.5, 7. Large cap stocks, higher risk exposure, maybe 15 to 18%. Returns expected on those at 8%. Small cap, higher exposure, 21, 22% in risk exposure, yield of 8.5, 9. And then we start getting into the happy place, core commercial real estate. Now we use core, meaning apartments, core commercial, core plus. Core just means in our world, consistent, cash flowing, right? Bringing money in, monthly, quarterly distributions.
Right.
So look at that one, right? It's got a 4%, I would say, risk exposure, and yet it has the highest yield historically of all other investments out there other than government bonds, right? Other than government bonds. However, government bonds are nowhere near that, nowhere near that 4%, 5% yield anymore.
Yeah.
So, data is data, it's ones and zeros. It's always been the safe bet to park capital into these kinds of investments going forward. So, we're working, baby. We're working it head down, making the calls, talking to the teams, buying the assets. It's a good time for sure.
It is good stuff. It is good stuff. And man, it's amazing how much has grown in just the past few months. I mean, a lot has happened, and there's been a lot of movement. And not only just going from building the team, but the fund and the people that are coming in. It's all positive and good stuff.
Yeah, it's good stuff. I'm looking forward to seeing you down there in Florida, brother.
Yeah, me too. Sunshine. It'll be good. It'll be a good reconnect for sure. Awesome.
Yeah.
I'm looking forward to my steak too, and I want an autograph.
I'll autograph your hat if you autograph mine.
All right. Thanks everyone for joining in today on the Cash Flow Show. We'll see you next time. Have a great week.